Okay, everyone, so let's take a look at the markets today and what opportunities presented themselves. So before I do that, let's just take a look at what the hell went on here. So in the ES, basically, first thing to note is that the trend is still up. And as I explained, it's going to test this area, basically tapped once, twice, so it's holding, and there's some heavy volume here, and finally we got a somewhat of a reversal today. It's not that strong, but if it takes out that level, then, next phase. So you can see there was a climax here, like I mentioned multiple times in my former videos, initiated the pullback to support. Support is holding. It's holding very nicely. And then you have this reversal up here. It's not, a big reversal, but it isn't. It did break the highs here. So now the question is, are they going to follow through and take out the former climax to reinstate the uptrend? And whether there's enough accumulation here to reinitiate the markup. But this area is still problematic for the bulls. So, as the market was pulling back, first of all, the thing is you're only looking for buys. Why? Because it's uptrending. Right? It's really that simple. So any sells you get, just ignore. The way the market works, and I'll explain this. So the way the market works is it's cyclical, right? So you're going to get signals here and here, and then here, and then here, and then here, then here, and then here. So you'll get bull bear signals, right? So because it's going up and then rotating, do not take these signals here. Do not take them. They have bad probability, they have bad risk reward, because all they're doing is just setting up the pullback to this level, right? To this level. To this level. They just set up so they have a tendency to be very low expectancy, having upthrusts and springs and all that. So any market you make those, look for buys and sells, you'll get them here, markup and the pullback, the rally and the pullback. Those turning points will give you the signals. So what you want to do is first get with the higher time frame and make sure it has buys, or basically higher highs, right? So let's say the market has higher highs, then on the lower time frame, just take the buys, 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 buys. That's all you're going to do. Take buy signals on lower time frame as the higher time frame is making higher highs. So over here, what do you see? You see higher high buys, 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 right? On the higher time frame PNF with volume, which is a tapering chart. Also, someone had the question of whether these are PNF charts. The answer is yes, they're PNF charts with volume, and that's what Wyckoff used for intraday trading. This is what he used for intraday trading alongside the wave chart. Alright, so I've just adapted it. It's the same thing, the same idea. So anyway, so this is the buys. You see any sells? No. So do not take the sells here. Do not take the sells, because they're just setting up, the pullback or the ABC correction. Instead, take the buys. And you can see, like, if you take the sell, you have a little move. You take the buy, you got a big move. Right? So that's how it works. And also, I'm looking for buys on the base breakouts. So it needs to have a base. Like, here's a buy. Here's a buy. This buy was end of day climax. Now pulled back. Now you know what's going to happen? Take a guess. Chances are there's going to be another buy, and that buy will be an entry to go higher. Okay, so long as the higher time frame has buys, the sells are just setting up pullbacks. That's why you can see the sells, they get bought. They just set up pullbacks, and then it goes higher. So this is the way the market works, and what happens with like 90% of traders get lost in the patterns and are not paying attention to the cyclical movements of the higher time frame, making higher highs and higher lows, and will just get caught up in the signal or get caught up in a pattern without basically understanding the structure. So they'll be on the wrong side, because you must see if it's making higher highs on any higher time frame that whatever you're trading, its higher time frame it has one purpose. That purpose is telling you direction. The higher highs are telling you either to buy, or the lower lows are telling you either to sell. So when you think about trading and say, well, what's the first problem? The first problem is whether I go long or short. That's the first problem when you're trading. Do I go long or short? And technically, that's the first thing. And the higher time frame tells you whether to go long or short. Second problem is, where do I find trades? The answer to that is support and resistance levels. One way to identify them is test the breakouts as well as high volume areas. That's the second problem. The first problem is, do I go long or short? The second problem is, where do I find trades? Third problem is, you know what, let me write it out. So the first problem is, because it's a two-sided market, right? So it's a binary question. Do I go long or short? That's the first. The answer is the market making higher highs? Higher time frame making higher highs? Go long. You know what, maybe I'll anyway, I was gonna draw a decision tree, but it'd be too much for this. Do I go long or short? Is the higher height, what the hell am I doing? Ooh. Alright, making lower lows. Then you go short. If it's that's simple as that, that's the first problem. Second is, where do I take trades? Answer is high volume areas. Right? And what are those high volume areas? They're basically where strong supply or demand was at. So this is typically the test of a breakout or breakdown, or a deeper, you know, the origin of the rally is usually a high volume area as well. Again, the idea is high volume area, but where is the high volume? It's on the breakout. So you trade its test, looking for its test, as well as near the origin of the rally, around the origin of the rally. And this is what you really need to be able to see, where it's at. So it's really high volume areas with these are just two spots. 3, how do I enter? How do I enter? There's the risk-based entry, but I don't recommend this for everyone. Right? It's basically on the pullback or on a pullback after a reversal bar, reversal trigger bar, whatever you use as your trigger. Okay? Then the fourth is, how do I take profit? Typically, you can have one position that takes at 2R, and the second half, so half position, which is your runner, and you trail using just whatever you use for trail. But one way to do it is it can be below rallies. So one way to do it is, you see the rallies, you just look for two boxes below. So 2 boxes below rally. Simple as that. You can use other approaches, but these are the major fundamental questions of trading, like how do you trade, actual execution. Do I go long or short? Those are only two, A or B. It depends on the higher time frame. If it's making higher highs, go long. If it's making low lows, go short. Do not counter trend, because you'll over a series of trades, it will not really give you that much of a benefit. It will also create lots of confusion, because you have to be two-sided, right? You have to be thinking long and short, trade with the trend, counter trend, and go back and forth. Keep updating your R strategies and all that. So where do I take the trade? Basically high volume areas, which occur where? Test of the breakout, breakdown. That's where they occur, and that's the level that occurs. And near the origin of the rally. Near the origin of the rally, I'll show you an example. You see here? This is a break, right? You see the origin of the rally came from here. So you mark that area, it's going to tap in. That's where you're going to look. Near the origin of the rally. Even here, you see this? Market goes all the way back to the origin of the rally. Origin of that bar, it's right here, the lows. Taps it, buyers come in. Boop. When they come in, near the origin of the rally, tap again. Long opportunity. That's what I mean by origin of the rally. Alright? But it's basically your high volume areas. You can use many. Where do I take trades? High volume areas, test the breakout, breakdown, origin of rally. Some use POCs. It's just a question, whichever method you use, how you identify those areas. This is one very straightforward. If you're trading pullback, near the origin of the rally or the test of breakout, breakdown. Others will use other techniques. I'm just showing one way to do it. High volume areas, because that's where the buyer strength was. So they will defend. How do I enter? You either enter on the way down or enter on the pullback after a bar. So you can either, get in right here, or after it reverses up, then long. So however you want to do it. You can also, validate this area, the strength of this area, strength of this level. There are a number of ways to do that. One very straightforward way to do that is, again, using volume. All right. How do I take profit? Half the position you should get out 2R. And then the half is your runner. And however you want to trail a stop, it's up to you. One way to do it, I said, if you have a box, half of the position should be, if you have a buy rally, under it. Under 1 or 2 boxes below. Okay. All right, I'm done. All right, so let's come back to this thing here. So we see that cats. Where was I? All right, so what was it? We are not taking any sells because the higher time frame buys, so only buys. All right, so this is a base breakout. This is the signal. Base breakout on the pullback, reversal, long. All right, here it pulled back. It was a little climactic. It pulled back, but it went really deep into this area. So I'm looking for a breakout again and look for the re-entry here. All right, next is crude. Again, this is all on buys, so you do not go short. Even here, you see this? It's pulling back. Fuck no. All right, you see how strong the daily is? In fact, if anything, it's going to pull back. They're going to reaccumulate and bust right through. All right, here you see there was sells, and then the market, as it's on sell, it basically gave a sell on the lower time frame. Take the short, bingo. All right, you see how big the move is? How big it is? All right. Whereas if you went with a buy signal, right? Look at this, nothing. It doesn't even work. Right? If you take the sells, look at the. So that's the thing. If all things considered even, the trend will give you far more reward and make things much easier psychologically. All right, so what am I looking for? I'm looking for the ES to bust through for that opportunity long, for what is crude basically to pull back and then bust through, and this gold I'm not going to mess with because I think it's pretty, it overshot, so we'll have to see. Just took out the low, we'll see. All right, that's all folks, take care, bye.